Mark Lackey is the Executive VP at CHF Capital Markets, and he joins us every week to talk about some of the small cap ideas in the resource space, and today's uranium.
That's right.
Uranium's had a bit of a bounce.
That's right, Pat. The last time I was on, as you probably remember, we were sitting at 27.50.
Yeah.
And I was getting guys saying...
Last time we talked about it, at least.
That's right. That's right. And I had people saying to me, well, maybe we're going to 15. Now at least we bounced back to 35.50. And, you know, some of the reasons, we've seen some more buying by the utilities, and people are starting to get a little bit more positive about what Japan has talked about what they're going to do. Of course, back in April, they suggested they were going to reopen some plants this year, and of course they haven't. And, you know, Pat, I've got the price going to $50 at the end of next year, and then I'm back to 70 by 2017. And it's predicated upon a number of supply and demand issues.
Put that 70 in context. How does that compare to, say, 5 years ago?
Well, that's back to 2011 in March. Fukushima, we're at 72.
Okay.
So, you know, and of course, if you go back to 2007, we were at 137. Now, I don't anticipate that kind of a situation happening again, although anything's possible. But that's a very unlikely scenario. We had a very tight market in those days, tighter than what I perceived. But nevertheless, Pat, you know, there's a sustaining price for every commodity. And I would argue to get uranium sustaining prices really more in the 50-55 range if you're going to really see a lot of new mines come into play. You know, in the basin, you can probably make money at 30. But the basin's only one of the spots in the whole world. That's right, the Athabasca Basin, that's right. So I do think this is an unsustainable price, and I think there's all commodities have a sustainable price, and some of them right now are trading below what I would think are sustainable.
Okay, but talk to me about the demand side, because why have the Japanese been so slow off the mark if you expected that to happen weeks ago, months ago?
I think it's a combination of factors. They have found that, you know, the anti-nuclear groups, particularly some of the foreign people out of San Francisco and West Germany that have come in there and, you know, put a lot of pressure on politicians to say that, you know, they shouldn't be reopening any of the plants. Although what's a bit inconsistent is Japan's now got 92 oil plants operating to produce electricity, and they're using 20% more coal. And that typically those environmental groups tend not to like fossil fuels either.
Anything. They don't like energy. Period.
Well,
they don't like windmills because they kill birds. You know,
you are right, Pat. That there are what I call the limousine socialists, who just don't like anything. But they have had some impact. I mean, I noticed the anti-nuclear numbers have grown a bit in Japan recently with all the work these guys have been doing. But I'd like to think now the Japanese government has said they're going to review everything. They're going to start looking at the fact that 20 to 25 plants have passed the test. I'm saying 12 by the end of next year and 25 in 2016. So, you know, I didn't bring back all, say, 56, and I don't think that's going to happen. But, you know, their trade deficit's really gone up in Japan. The utilities are about $34 billion they've lost since the nuclear plants have been shut. So the obvious thing to do in Japan would be to restart some of these plants. I actually believe that we will start to see that next year.
Okay, so you're timing on that 50-55. Now, what are you looking at? Forum, we've talked about before.
That's right. And I should say quickly, Pat, that on the supply side, Rio Tinto has said that they produced only 33% of the uranium this year that they produced in 2011, so they clearly shut some mines. And we see some other mines that aren't going forward. So that's another reason why I'm more optimistic than the people that have uranium sticking at $40. Forum, we've mentioned before, Pat, you know, I like the fact they met all their milestones. They optioned off their Patterson Lake project. They got some another good project in Key Lake, and they had some really good drilling results in northwestern Athabasca. And of course, their stock price went down, even though the uranium price has gone up. So people are basically, I've already told the brokers are telling me there's tax loss selling going on, so they're clearly getting hit by that. But this is a very well-run company with a lot of money. So I think, Pat, they're a survivor. So, I mean, I'm not concerned about where their stock price is right now, although I can say that given I'm not running the company. But nevertheless, I think there's a good opportunity here for people to look at uranium stocks over the next couple of months as we get rid of tax loss selling and recognize that these companies are trading as if the price of uranium is at $15, not $35.50.
Right, exactly. Now, you make an interesting point, though. It's October.
That's right.
Tax loss selling is a little early.
Well, I get brokers telling me they got people already doing that.
Wow.
And so I was a little surprised at that as well. Now, there may be a strategy here, Pat, that they want to sell now, and if you're in a non-registered account, you can buy it back in 31 days. And if you think it's time to buy uranium, then you sell now and you buy back in 31 days, feeling that it won't have necessarily moved in that time period. If you sell in December, the risk you're running is that there'll be no movement in January, and I think the utilities are going to be back in buying some uranium here in November. So I can see why people, on the other hand, I would not be selling necessarily a tax loss on something that I like, as opposed to, you know, if you own something that doesn't make any sense.
Yeah. Unless you got some big wins, I guess, on the state side. Oh, well.
Right.
Can Alaska.
Right.
I don't think you and I have talked about this.
No, we haven't, Pat. And Can Alaska is a company, again, he's got cash. He did a JV on one of his properties. He's got a very big position in the basin. And so, again, he's going to start doing some more drilling. So it's a really good prospect here. And, again, the stock is... how else would I say? It's pretty cheap, just like Forum at this time. And but he's got cash and he's going forward. You know, he kind of sat back for about a year or two and didn't do as much because he saw what was going on in this market.
Who's he?
Oh, sorry, Peter. Peter Dresser runs Can Alaska. And so I think the management team here, it's very, very experienced. He's been around for a while, and as I said, he's got a very big position with some very good JV partners. One of his partners is actually doing some drilling right now, and if he gets some good results, I mean, presumably the markets are going to be happy with that, but whether or not it translates into higher prices in the short run.
So this is very much a greenfield. It's kind of, you say he's got cash and he's got JV partners.
Right.
So how much cash on a per share basis?
Yeah, he's got, well, let's see, he's got 3 million, what's he got? Maybe 12, 15 million shares. So he's got a pretty good cash position here. But what I like is he's got a lot of properties and he's got JV partners. So
who are the partners typically?
Well, he's got he got one new uranium company that's Chuck Fipke's behind. He's also got the Japanese that have been JV partners with him for a long period of time. So, you know, again, the two companies I've mentioned so far, Pat, are survivors. They're not. There are some people in the basin, Pat, that are going to disappear. I agree that's going to happen. And there's guys who are going to disappear that are in jurisdictions that have serious problems. But at the end, you're going to be left with a lot fewer companies. And I'm picking ones here today that I say, look, these guys will survive, and that, you know, we're going to see better uranium prices next year.
Okay, so now, to be clear, Can Alaska doesn't have anything, they're not producing anything right now.
No, they're not. No, they're not.
So it's
and none of the guys, I mean, there's very few producers in the space, Pat. You know, you get past Cameco, Denison, URE, there's maybe, you know, half a dozen guys that have production. And that's really it. And then I used to look at about 70 juniors, now I'm looking at about 10. I mean, it just shows you how the space has dropped dramatically.
Why would I buy it if they're not producing? Are we buying on speculation that somebody bigger comes along and buys them?
Well, that's one part. Plus, I mean, these guys have had some good drilling results, Pat. At some point, there's going to be more merger activity. And I would say, look, you want to own some greenfields and some juniors simply because uranium prices move. In the last big move in uranium prices, what did we see? The better greenfield companies, not the guys that had moose pasture, but the better greenfield companies did move significantly. So I think you also have to look at that as part of your portfolio.
Oh, interesting. And then Pure Point.
Well, similar situation. They're in the basin. They have money. They have some good prospects. And they've been doing some work again recently, Pat, and they plan to do more here as we're moving forward. Because I think a lot of the people looked at 2750 as the bottom and that we're recovering. So the companies that have money and have good management teams are going to go out and drill and are going to do some work. And the ones that don't do anything, Pat, well, they're going to disappear off my radar screen.
You know, we make reference to the basin. How big is the basin? Athabasca Basin. Like, because there's, you know, you've got dozens and dozens of names you've mentioned.
Yeah, that's right. Well, it's sizable, Pat, but there's only certain parts of the basin that make more sense to drill than others. I mean, at one point, the eastern part of the basin had all the mines. Parts of the west have found some big grade uranium, like Hathor, you remember, was taken out by Rio Tinto, for example. And in the western area, some of these make a lot of sense because they're shallow. There are other parts maybe more in the middle of the basin where I'm kind of staying away from because it's deep drilling, it's higher cost. I'm not involved there. I'm really only involved in guys in the east and parts of the west. So I'm not involved in the whole basin. That's something people should recognize. I'm really sticking to what are known areas and shallower areas that have had success. So I'm sticking to where the uranium has been known to exist, not where it might exist.
Okay, and are these veins that we're typically looking at, or are these open pit mines?
Combination, Pat. They're both, actually. You know, we have sizable open pit, and some of the guys I mentioned today are looking at very shallow drilling, particularly Forum, extremely shallow drilling, so very cost effective. But, you know, Cameco has mines that, for instance, are not just open pit, but are your typical shaft mines. So it depends on how deep you have to go. But remember one thing, the grades here are the best in the world. And that's one of the reasons why I feel comfortable in being in Athabasca, as opposed to maybe being some other areas.
Okay. Mark, great to have you here.
It's great to be here, Pat.
Mark Lackey.